Hi friends, Simon here from InformedTrades.com. Today is November 25th, 2015. Time for our weekly chart review. Doing this on a Wednesday this week because we have the Thanksgiving holiday in the United States tomorrow, and then Friday is usually a pretty quiet day where not much happens. On the screen right now you're seeing the weekly chart of the US dollar index. We are now approaching resistance level here, very clear resistance level that goes back to March of 2015. When we hit that level, we ran into it. Tweezer pattern right here that sent the market all the way back down to 93. So could this pattern hold again? Could we bounce off this and go back down to 93? Possibly. I think you could definitely make a technical case that is occurring or could occur. If we zoom out to the monthly chart, it's been a while since we've gotten, this level was also proved to be valid or significant back in 2003. Let's go back even further. So if we break past this level, really we're in territory that we haven't seen before, 2003 really. So, does a clearance, if we clear here, let's say especially if we can get to 102, then resistance is at 108. Let's actually put that line on. And then possibly all the way up here, 120. So, so something to think about. This could be the stage. The stage could be set for a much larger dollar move. Delete that. A much larger dollar move, but at least in the short term, we are approaching resistance. So before we jump the gun and say we're going to 120, let's see if we can clear and close above 100. My hunch, I would suspect that we run the resistance and bounce back a little bit, maybe to 97.82, but we'll see. So with that as our backdrop, a strengthening dollar or dollar approaching resistance, we can see the euro dollar, which is largely a large component of the dollar index, that is approaching support. We have support at 105. Right now we're at 105.83, so about 90 pips away, 83 pips, 84 pips, is support level. So if you've got a short position, you may want to look to take some profit in about 80 pips. Conversely, we may get a bounce at that level, so that may be a time for a counter trend play to buy at that level at 105. High-grade copper, we highlighted this AB equals CD pattern, potential pattern back in late September of 2015. That pattern, we talked about it last week. We said it was approaching completion. It has now definitely reached completion. We also have a doji candlestick here, so we could get a rally from here. If I was short here, I would definitely be taking some profit, maybe taking all profit. I am not. I think it's a little premature to buy. Some may want to because we do have a new doji pattern at support, which could suggest that the market will bounce back up to maybe 223. There's definitely that possibility, some technical evidence for that, but I don't think there's enough. I would hold off on that. Crude oil. We did fall to support at around 40, and we have rallied. I think this could be the trading range that we're in. Let's zoom in a little bit there. Let's actually look at it on the daily chart as well. Right here, you can see it. I think we could go all the way back up to 49, the top of the range. Let's see. As I've mentioned before, I am long at 44. I have added that position on numerous occasions. If we zoom out to the monthly chart, I'm still leaving some capital for right around here in case we, get to 35. I think that'd be another great level to buy at. So in sum, I do think, though, that, we're at let's go back to the weekly chart. We're bouncing off support here. We're in this range and could go back up to 49. Gold, that has been, if you've got a long position in gold like I do, this has definitely been a bit of a disappointment. Of course, still a good opportunity to buy, at least in my opinion. I've been accumulating over the past year. I'm continuing to accumulate more than the past year, but past year especially has been a good opportunity. I thought we would find some support here at 1080. We have not. The fact that we have not, and we're now closing, looks like we're going to close below 1080 this week. We guess have to zoom out a little further. Then you make the case for 980 as the next really meaningful support level. So is that where we're headed on gold? Possibly. That case becomes a little stronger when we think that, the dollar has been strong. If the dollar closes above this resistance level here, if it closes above 102, that would suggest that gold has even more momentum to the downside and could test 980, next major support level. Last but not least, S&P 500. We've been watching this closely. Let's. This is the monthly chart. Let's actually go to the weekly chart. Okay, a hanging man pattern here at the bottom trend line here. So that would look a little bearish, but I'm still, to me, this still looks very shaky. And global equities in general this week looked a little shaky. It's hard to say. It's definitely lost some momentum. However, I don't know if it's totally going to decline. Like I mentioned before, I closed some of my positions back here in August on this break, but I've left a bunch on, and I still think that's the right course of action. So I'm not doing anything. Price is still above the 50 and 200 exponential moving average on the weekly chart. So let's see. The major thing is, can we get above 2100? Or conversely, are we going to fall, really back down to 1970? Are we going to go even below that? So let's see. To me, it just looks a little shaky, but I'm not taking any action. That's about it. Any questions you have, anything you want to add, join us at informedtrades.com. If you like this video, if it helps you learn, please like it on YouTube, share it on Facebook, Google+. Best of luck in your trading and investing, and we'll see you next time. Take care.